You may have been wondering what is going on in the market. The stock market has been down, the crypto market has been down in the past couple of days, and people have been wondering what is really going on. We've seen coins like APECOIN that really pumped to $27 a coin and then suddenly dumped right to 14 in the last 24 hours. That was like very surprising for a lot of people, including coins like ICP that was trading in the 20s and now dumped right to 11 point something. And we've also seen GMT, which was like a power coin, moving up really fast and suddenly stuck at three something dollars. And also not forgetting ZIL. ZIL was like at $0.2 high, and then right now at 0.07. Like that's really low from where it was in just not up to a week ago. So what is really going on in the market, you may be wondering. That's why this video is right here, because we're gonna find out what is happening and if this will continue or not. Keep watching. According to alternative.me, fear and greed index, there is fear in the market right now, 27%. This is in anticipation of what is going to happen in just a couple of hours. The Feds are going to raise interest rate. That's pretty much very clear. It's going to happen. But now investors are in a lot of doubt as to how the market will react. Will the market dump more, or will the market pump after the rate hike? That's the question that is still on the table. At the end of this, I'm going to give my opinion about it. How will the stock market respond to a 0.5% rate hike? The Federal Reserve is likely to raise its benchmark interest rate at next week's meeting by 0.5%. We haven't had a rate increase that high since the dot-com bust in 2000. If we did have a half-point rate hike, how would the stock market perform? That's the question that is being asked right now. And based on the data of before, based on this data right here, we've noticed that the weeks prior to rate hike, the market usually dump a lot. More like what is going on in the market right now. The market dumps, and then during that time of rate hike, the market may dump as well, but later on, the market will pump. So that's what happened in history. And somehow, when we check back at CNN Money right here, we notice US stock market, US stock surge along with rate hike. And that was like in 2000 when the market was expected to dump a lot, but instead the market pumped after a 0.5% rate hike. So when that happens, people wonder why the market is pumping when it should be dumping. How do interest rates affect the stock market? The investment community and financial media tend to obsess over interest rates, and for a good reason. Interest rates refer to the cost someone pays for the use of someone else's money. So when you take money from someone else, that could be the government or the Federal Reserve or whoever, and you pay an interest rate on it. If it's too high, you probably won't want to take that money. And if it's too low, you probably want to take that money. So what the general assumption is, when the Federal Reserve raises interest rates, the market would dump because investors won't want to borrow money that is too expensive to borrow. Or if it's low, everybody borrows money and buys stocks and buy goods and services, and the market booms and booms. As a general rule of thumb, when the Federal Reserve cuts interest rates, it causes the stock market to go up. When the Federal Reserve what we're experiencing causes right now to go down. Inflation. There's no guarantee boom as to how the market. The Federal Reserve needs to step in and then rate change. Increase the interest rate. In the past, how did the inflation, the rate hike affect a problem? Market, right? How did the market respond? We notice according to this data here that the market responds negatively 1 week or 1 or 2 weeks earlier before the rate hike, and then 1 week later or 2 weeks later or some months later the market pumped a lot. So on Wednesday the Federal Reserve will announce their decision about the interest rate. One thing we're pretty sure about is there will be a rate hike, and how the market will react is something completely difficult to say. But based on history, which we've seen, in 2000, the market responded positively some weeks later. And is that going to happen right now as well? Or is that going to happen this year as well? One other thing we should note is this is something that the Fed said it's going to go on like throughout the year and maybe into 2023, which means that we're going to have a really tough market this time. It's going to be a bear market because after this we may have a pump in the market, but that won't last a lot because in June there's still going to be another meeting in June and then probably more rate hikes. So we can say throughout this year we probably have a bear market, but right now after the rate hike we may experience a pump, but that's probably not going to last for long. And this includes all the coins that we've talked about: ICP, GMT, Bitcoin, all the coins. How far down these coins go before a complete recovery after all these rate hikes is something that we cannot say for sure. But it's pretty clear, especially for the alternative coins, it's pretty clear that there's gonna be a lot of dumping going on throughout this year. Even though we'll have the trending is gonna be like downwards, and we will have a little bit of upward and then continuous downward. That is something I'm pretty sure would happen. So if you're trading in this market, you want to make sure you protect your funds using whatever means you have out there. I hope this video was helpful in some ways. If not, no problem. See you again in my next slides. Bye.